Yeah, I am Anthony Bedgood, SRAR, Southland Regional Association of Realtors president, and again, happy to be doing the introduction for this program today. Who would have imagined that wildfires could devastate our region as they have in the past few years? Destroying thousands of homes, thousands of businesses. This is supposed to be earthquake country, but needless to say, nearly 30 years after the Northridge earthquake, geologic scientists warned that we're in a window for a 7.0 earthquake, and that it's very plausible. Mel earlier was talking about the 71 earthquake and the 94 earthquake. We were in that 20-year window, and we've exceeded that. So the San Andreas fault and other active faults are showing renewed activity. And I hate to be very doom and gloom, but one of the most important things that we can provide to our communities and to our clients is information, right? So today is a practical playbook of sorts where we have representatives from many of our great departments giving us information. So California Department of Insurance is going to be talking about coverage, claims, consumer protections, plus FEMA quick facts on immediate aid, how to apply for food, water, and housing. SBA will be speaking about financing options for businesses, landlords, and nonprofits after a disaster. LA County Assessor's Office will be talking about calamity reassessment and tax relief during demolition and rebuild. So, you are often your client's first call. Let's equip them and equip you to guide them before and after a disaster. It's not a matter of if, it's a matter of when. So thank you for being here today. You are going to get a lot from all of our presenters who are here today. We have a lot of great presenters here. And Mel, I will kick it back to you.
Very well. Thank you, Mr. President, and congratulations on a great job you've done for 2025. Thank you for finally getting, let me take my mute off. Thank you for finally getting the interest rates down. We hope they go down a little bit further, but you're on the right trajectory. So thank you again for that. Robert, I'm going to ask you if you could begin to advance the slides so we can move on to the next area. All right, so this is our webinar today, From Recovery to Resilience, a Disaster Playbook for Realtors, co-sponsored by the Southland Regional Association of Realtors, the California Association of Black Real Estate Professionals, the National Association of Realtors, and many of us are also members of the commercial sector of the National Association of Realtors. So this is our event for our commercial day today. Next, Robert. All right, we've already saw this good-looking person. You didn't even talk about Katie, man, and you're in trouble. But our president is a newlywed. So how about it for our president and his beautiful wife, Katie, who also happens to be working for the government, FEMA, one of the good agencies in the government, not the IRS, but FEMA. They're always there to help. Go ahead, Robert. All right, so without the folks that you're seeing on the screen, we would not be here today. Many of them are past presidents of the Southland Regional Association of Realtors. They're commercial practitioners. Some have been involved for many, many years. Some are on the board of directors now. I know Jesus just recently got reelected. Vilma Latowski is a board member. Arnie Garfield, John Samoon, who does a lot of beautiful work in the commercial appraisal side, and Sue Horowitz. She's been around for a long time. And I mentioned my friend Gina Uzunian, who is a CCIM designation recipient. So some of you I don't know, but I look forward to knowing you. I do know Brian Hadcock. So thank you all for allowing us to produce this event today. Go ahead. All right, so this is the old guy with the gray hair. Some of you know a little bit about my background. This year, I serve as president of the CABREP, California Association of Black Real Estate Professionals. Earlier this year, we did 3 different webinars training about 180 realtors and realtists on how to be advocates for the Altadena wildfire victims. I also happen to be a realtor emeritus. What does that mean, Kim? That means I'm old. I've been a realtor for over 40 years, and this is my 47th year. I'm a legislative housing advocate. I'm a former Metro Board member for the Metropolitan Transportation Authority, two times actually. One for Mayor Richard Riordan in the early 90s, when we were building a lot of the infrastructure, the purple line, the red line, the green line, the 105 freeway. And again, from an appointee of Mayor Antonio Villaraigosa when we were building the Expo line, the Gold line to Pasadena, and so on. So I can tell you a bit about what happens during a disaster for Metro. I was also a fire commissioner for the city of Los Angeles, and I was a commissioner, and we hired about 500 paramedics during that time to make sure we had coverage for all of the stations throughout the city of Los Angeles. I am a former, not former, I guess you'll always be an All-American. Once you're an All-American, you're always an All-American. So I'm a first team Kodak All-American football player. I was drafted by the New York Football Giants in the mid 1970s. Played a little bit for the Chiefs in Kansas City and in Canada for the Calgary Stampeders. Robert, let's go on with the real stuff. All right, these are the folks who will be speaking to you today. There will be a question and answer period toward the end of our session today, but we have someone from the California Department of Insurance, the Insurance Commissioner's Office. FEMA could not be here today. As you know, there is a government shutdown, and there's a lot of reshuffling of staff going on with FEMA. The current administration has made known that they are intend to get rid of FEMA and push the FEMA responsibilities back to the states. We'll see where that goes. But we do have an agency that's been around for as long as I've been around. That's the Small Business Administration. So we'll have someone from there. And then the Office of the County Assessor will also be a panelist today. So you'll be able to get some great how-to, good information on what you can do to be an advocate for your client. There you are. Imagine this. So just so you know, this was a virtual AI production. That did not happen, but there's a good chance that we will have something like that and perhaps even worse. Some of you know, those who live in the Santa Clarita Antelope Valley, that there's a fault called the San Andreas Fault, which is, somewhat active. We have a number of faults that most people don't even know about in downtown LA, near downtown City Hall. I was privy to that when I was on the Metro board when we were building the subway underground. And by the way, 94, I rode the subway in 94. The subways do work during earthquakes. In fact, they were working better than the freeways were working. Go ahead, Robert. All right, so here are some questions that each of you should ask yourselves. Are you ready? Do you have a plan? What is it? Are your clients ready? Do you have a playbook? And what about insurance? These are really pertinent questions you need to be asking yourself, not only for your personal well-being and your personal financial status with respect to real estate and businesses, but also you should be asking this question of your clients. And this is how you can take this tool to become an advocate for your clients prior to an incident happening. We know it's not a matter of if, it's a matter of when a tragedy will happen, a disaster will occur. Go ahead. So when I was on the Giants, they had something called a playbook. A playbook is, where you learn all the different nuances of the formations, the plays, incidents, what to do, when to do it, what your position is, and who has what assignment. So that's what a playbook is. And for the National Football League, each team has a playbook. And that playbook is very, very valuable. In fact, when you leave the team, you have to turn in that playbook before you can get out of the building. That's how important the playbook is to each NFL team. Now we're going to move on to a playbook for you, and that's our next slide. A playbook for realtors. Realtors need to have a playbook for how to recover after disaster. And today we're going to go over some of those things that should be included in your playbook. Go ahead, Robert. All right, so here's the first 36 hours, the first week, the first month. Here's some things that you should have in your playbook. Number one, evacuate. Get safe. Life safety. Shut off your gas. Turn off your water. Turn off your power. Make sure things are in place and get out of there. Get underground or get low. If there's an earthquake, if there's a fire, get out of there without running into another vehicle, of course, or running and getting ran over by a vehicle. But here's another thing you should do in your playbook. Your first 36 hours, you should document. Document, document. Because when you go before the Small Business Administration, but more importantly, when you go before FEMA, and even more important to that, when you go before the insurance carrier, they're going to be asking you, well, show me photos. Show me some evidence of the things that you say you had, the improvements that you made. And so here's what you can tell your clients now is to create an album, an album on a hard drive or a thumb drive or something that they can use to store all these valuable photos and please, all those documents, and please do not keep them at the house. Keep them somewhere else because you don't want them to get torched with the fire or with the wind or with the earthquake or whatever that disaster happened to be or a tsunami. So notify your insurance carrier, notify those around you, save your receipts. Register with FEMA, register with the Small Business Administration, register with the Office of Emergency, Planning, and start your process. Start your process with the assessor's office, and that's why we have Frank Diaz here who's going to talk about that. And share. Find out where the local disaster center is located at, and make sure that you are able to go have a personal visit. But if you can't visit personally, I know FEMA will allow you to make a claim on their app. So you can download their app. FEMA also will allow you to make a claim via telephone, or you can make a claim in person. So there's about 3 or 4 different ways that you can make claims at FEMA. Unfortunately, our FEMA representative could not be here today, but through the courtesy of, his name is Brady Penn, who's a regional rep for FEMA. He was able to get me some great information, which I'm sharing with you today. So compliments to Brady, even though he's not here because the government shutdown. You know that some agencies are not at their full strength. And so go ahead, Robert. All right, we're going to talk about the first week, and these slides are going to be available for all of you in a couple days or so. At Southland Regional, we'll send them out to you, and they'll make it available for you to access every slide that we have here. All right, so the first week, meet the adjuster. And that could be the FEMA person, that could be the adjuster for your insurance company. That could be, your Small Business Administration personnel. Take note of your property, your personal property. You might want to apply for an economic, I think it's called EIDL loan with the Small Business Administration. Kim Weatherby will get more into that. Talk to your lender. Maybe there's a way to get a interest abatement program in place. Because if you have a loan on a house that's destroyed or no longer in existence, it makes sense for them to allow you to have a holdback on the monthly payments. And those of you who are doing leasing, most commercial leases that I read, particularly those who are formed by the California Association of Realtors, they have conditions in there where if the building is uninhabitable for a certain period of time, you have the ability to, one, stop the rent from being paid, and two, actually terminate the lease. So you need to take a look at the lease. Here may be a good reason for you to call your clients who have a commercial lease and find out, do they have that provision in their lease? And perhaps you can talk to them about amending the lease, or on the next lease that they sign, that they make sure they have that kind of provision in their lease. Go ahead. All right, so here are some of the things that you want to do after you've been able to do the immediate work. You might want to engage an architect, an engineer. an expediter who can help you get through the permit processes. You might want to talk to a contractor who can help you get a bid on rebuilding, in addition to the estimates you're going to get from your adjuster, from your insurance department, from the SBA, from FEMA. You might want to coordinate with some folks at the assessor's office to try to get your tax bill to give you some relief. So these are some of the things you should be doing your first month or so after the incident occurs. Next. So disasters do happen. And you know, for something funny, I've gone through at least two immediate disasters, the Sylmar San Fernando earthquake, the Northridge earthquake, and I don't know why they want to disrupt my sleep. But you know, the Sylmar quake happened at 6 o'clock in the morning. I was still snoozing. But I woke up pretty quick. And then the Northridge earthquake was 4:30 a.m. So, you know, these disasters don't announce that they're coming. And so you have to be ready to move and get out. And the winds in Altadena and the Palisades area were upwards of 60 to 100 miles per hour hurricane force winds. As a fire commissioner, a former fire commissioner, I know that the helicopters could not fly during those tremendously high winds because it was unsafe for the pilots and the helitack crew on the helicopter. So a lot of the fires were able to continue to burn because they could not get air support. Next. All right, we're going to move on into the insurance. There's this young lady is really wise. She's a confidant of the insurance commissioner. Andrea is an analyst with an outreach person for the California Department of Insurance. Some of you have heard about insurance. You know that in order for you to close a transaction, be it for a lease or for a purchase, you have to have insurance. So with that, I'm going to turn this section over to Andrea Valdez. Thank you so much, Andrea. You're on.
Thank you, Mel. I'm really excited to be here. Oh, why is my hand raised? I'm just excited. I'm ready. Okay. Good morning, everybody. So I'm going to be talking about insurance. So I'm going to go ahead and I'm going to share my screen. Now, you either know exactly who we are or you have no idea who we are. I do a lot of presentations and it definitely varies. So again, thank you for the opportunity to be here. So let me start off by discussing what the department does. So the California Department of Insurance, it's also known as CDI. We love acronyms in government. It is a state agency, and we do not sell insurance. We do not promote any insurance companies. Our priority will always be consumer protection. So CDI regulates the insurance marketplace to protect consumers from fraud and abuse. So currently the insurance commissioner is Ricardo Lara, and under his direction, we regulate most lines of insurance such as homeowners, auto, life, and health. Because when you buy insurance, you're buying a promise, and CDI makes sure that insurance companies make good on those promises and have the ability or solvency to pay for those claims in the event of a loss. We also license and set the standards for agents and brokers selling insurance. We perform market conduct reviews of insurance companies. We also resolve consumer complaints and investigate and prosecute insurance fraud. Now, while we cannot require or compel insurance companies to sell insurance, if you have any problems with your insurance company, agent, or broker, that's something that you're going to want to contact us for help. So as we know, earlier this year, we had the most devastating wildfires in California history. So just to give you a little update of where that is, over 27,000 claims have already been partially paid. Over 12.1 billion has already gone out to survivors, and nearly 435,000 on average per claim to help people pay for living expenses, replacing the things they lost, and start that rebuilding process. Now, when the disaster happened, I was actually on maternity leave, but my colleagues, they were so quick to action. We set up insurance workshops in the Palisades and Altadena areas within the first week. We were doing town halls, we were doing rebuilding events at the city, the county, the state, and federal level. And we also started opening up those disaster recovery centers. In those disaster recovery centers, you can come in and you had the DMV there helping with licenses. You had food banks there. You had us there. We were handing actually checks out on the spot at those disaster recovery centers. And just some emergency actions that have gone into effect since then. So we declared a 1-year non-renewal moratorium for residential policies within or adjacent to wildfire perimeters. We ordered insurers, including the FAIR plan, to properly and promptly investigate all consumer smoke damage claims and ensure fair payments under law. We ordered insurers, including the FAIR plan, to continue providing additional living expenses coverage until wildfires survivors' homes are deemed habitable as a result of the fire debris, the ash, and other hazardous materials. And we ordered insurers, including the FAIR plan, to pay more than required 30% of contents covered without requiring a detailed inventory. And I'm going to go over the detailed inventory at the end of this. And I could probably talk about insurance for 2 hours, but I'm definitely shortening it up into 10 minutes. So something I do want to switch gears into is I want to switch gears into our Safer from Wildfires framework. So this was the first in the nation for discounts to consumers for wildfire mitigation. And I'm going to go ahead, I'm going to go in those 3 parts of that Safer from Wildfires framework. So the first one, or just to take back a little bit to wildfires, I mean, because if you're not familiar with it, so it is a 3-step system to protect your home, surroundings, and community, which in turn provides consumers with discounts and transparency about your risk rating. So under this regulation, we're seeing more businesses and homeowners and communities making investments in wildfire safety, greater community resilience, reduced losses from wildfires, more insurance coverage for those mitigated properties. Something I always like to talk about. We have actually been working up, I'm not sure if anybody's familiar with Paradise. It was a whole town that was wiped out in the fires. And we've been working with Jen with the Paradise Fire wildfire. I like to talk about it in every presentation I do because they are just doing some amazing work. You know, a lot of people, they don't want to change their home. They don't want to, I like my plants next to my house. I don't want to, have gravel. Like, it doesn't look great. No one was actually writing in Paradise. And through their grant program, where they have a grant gravel program with around 5 feet of the home, they actually got Mercury to start writing there cheaper than the FAIR plan. So it is amazing. If it's something you want to check out, again, it's the Paradise Rebuild Foundation. So that's something I would definitely look into. So again, it's also important to note that CDI does not have the authority to force insurers to write coverage. So this regulation of that Safer from Wildfires, it attacks that root cause of non-renewals, which is wildfire risk. And again, it's making Californians safer. So with accurate pricing of insurance, we expect to see those more insurance options through people through a more competitive market. So that first one is pretty straightforward, protecting your home or business. So that's going to be that Class A fire-rated roof, fire-resistant vents, the multi-pane windows, and a minimum of 6-inch non-combustible vertical clearance at the bottom and the exterior surface of the structure. And again, this is all available online at our website. Step 2, so this is going to be protect those immediate surroundings. So we want to clear that vegetation and debris from under decks. We're going to want to clear the vegetation, debris, mulch, stored combustible materials, and any and all movable combustible materials within 5 feet of the building being evaluated. So that's circling back what I was just talking about the Paradise. They did 5 feet of gravel around the home. And there's actually photos and it does look beautiful. And then any removal of combustible structures, sheds, or other outbuildings from the immediate surroundings of the home to at least a distance of 30 feet. And finally, step 3, it really is a community effort to, a community level mitigation designation. So this is going to involve at least most, if not more, local government agencies, fire emergency services, planning, and community level mitigation designates include FRRC by the Board of Forestry and a FireWise USA site in good standing. So the FireWise program is a nationwide program created by the National Fire Protection Association, And when I started with the California Department of Insurance, I think we were around 700, and I've been here quite a few years now. And we have over 1,000 Firewise USA communities. And again, with more forming all the time. And it's an important part of California's efforts to ensure communities are prepared against wildfire. So I'm not sure if anybody else has heard about our sustainable insurance strategy. So this is something that was launched last year. And so these were some executive actions and reforms that Commissioner Lara is taking. So that's that increasing availability of insurance in wildfire distressed areas. Using our prior approval rate authority, insurance companies will write no less than 85% of homes and businesses in wildfire distressed areas. And again, this wasn't a historic agreement between the department and insurance companies. We wanted to reverse the trend of the growing FAIR plan and closing that insurance gap. The department will define these distressed areas using a data-driven approach. The second plan is that we will return FAIR plan policyholders back to traditional insurance, with first priority given to hardened homes and businesses following that safer from wildfires regulation. And that next part is to address that climate crisis. So the commissioner will introduce regulations to utilize forward-looking catastrophe models, prioritizing wildfire safety, mitigation, and transparency. And again, we have a clear template on how to do this. That's our Safer from Wildfires regulation, requiring insurance discounts and increased transparency on wildfire risk scores. And for realtors, you definitely want to start early. Many companies are still writing, but it may take longer to find in higher risk markets where there are fewer options. And you definitely want to talk to as many agents or brokers or find a listing at insurance.gov. So we do have online insurance agencies that are writing. You can look by zip code on there. And another thing I want to mention is the FAIR plan. Dun, 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 everybody's least favorite thing. So if you cannot, and just to mention, we are not the FAIR plan. So if you cannot obtain coverage in the traditional insurance market, the FAIR plan may be a temporary solution for standard fire insurance. And again, the California FAIR plan is the insurer of last resort. It is not a state agency, nor is it a public entity. There is no public or taxpayer funding. It is a fire insurance pool comprised of all insurers licensed to conduct property casualty business in California. It's named a peril policy, so it's only going to cover fire, lightning, internal explosion, or smoke damage. The FAIR plan is limited to $3 million for all coverages combined for structure, contents, additional living expenses. If you have a FAIR plan policy, you would consider purchasing a DIC policy. And that's a second companion policy to cover other hazards on the premises, such as liability, water damage, and theft. And that's making it a comprehensive homeowners policy. So in the past couple of years, insurance companies have been limiting policy writing in certain areas, and more consumers are using the FAIR plan as the insurance of first resort. And that's not how it was intended to be used. Circling back, just a couple more slides here, to the Safer from Wildfires and the FAIR plan. The FAIR plan actually began offering insurance discounts, and this was starting last year. So the FAIR plan has offered a 10% discount for policies participating in a Firewise community, and that's been since May of 2018. Now the FAIR plan is offering 2 more wildfire hardening discounts, and that's going to be for protecting the structure, and another one for protecting immediate surroundings of the dwelling. So when applied, these discounts will reduce the wildfire portion of the policy's premium by 10% and 5% respectively. And that's going to be depending on your level of wildfire risk. That can be a large component of your overall premium. So definitely contact the broker to find out what this means for the premium, how you qualify, and how you could receive that discount. And just another thing that I do want to discuss is most people don't know that insurance companies will actually assign a risk score to your home and business. And a lot of people want to know this information because if you know the risk on that property, you can take the action to reduce them and make you and your neighbors safer. So the regulation requires insurance companies to give you the wildfire risk score for your property, and they have to tell you how this score was created and then what factors went into this risk score. So the wildfire risk score or classification must be provided to you at the following times. And that's going to be when you apply for a new policy within 15 days, Before you renew a policy, that's going to be within at least 45 days. Before you're non-renewed, that has to be 75 days. And when you complete mitigation on your property and you want to request a revised score, that has to be within 30 days. So creating this right of appeal is giving that power back to consumers. And if you're not satisfied with that response, that's when the department will step in to assist. So yeah, for realtors, help educate clients, discuss how they can lower their insurance costs or increase their insurance availability through mitigation efforts. Talk to them about that safer from wildfires and the fire hardening and the defensible space addendum, and schedule a defensible space inspection with your local fire department or CAL FIRE. And then just switching gears from the department is going to do, it's actually going to be what you can do to prepare for disasters pertaining to insurance. So the event of emergency, always follow those evacuation orders from local authorities to keep yourself and your family safe. That's first and foremost. If time allows, locate your insurance policy documents, upload them to a secure cloud storage using your smartphone, send them to your email, have it somewhere that's easily accessible in the event you unfortunately need to use it. And at the department, we have many resources to assist consumers. So we offer informational guides on all lines of insurance on our website. If you go to our website, you can actually submit a request for assistance for any claims. You would be assigned a compliance officer for that. And one thing I do want to mention, and I know Mel had talked about it, is the home inventory guide. So it is a workbook that you need to fill out room by room. You will inventory and list every item you own in your home. It's tedious, it's time consuming, it's not fun, but it's going to save you thousands of dollars and hours of and probably a headache if you do this now before you have a total loss. Because your insurer, they're going to require you to give that to them, a list of everything that you lost and want to claim. And the more itemized your inventory is, the more you can claim and get paid from the insurer. So online, we have that top 10 tips for finding homeowners insurance, and that's going to guide you through the process. If you've been non-renewed or trying to find insurance, when purchasing a home. And on our website, again, we offer that homeowners insurance finder tool. I can enter some stuff in the chat too to all those links, so I will include that in there. And then the annual consumer complaint study. Do you know how your insurance company ranks? Every year we report how many justifiable complaints are filed. And again, this is just the tip of the iceberg of the Department of Insurance. So all these resources are available to consumers. And that website again is insurance.ca.gov. Our number is here, 1-800-927-4357. I know you're probably thinking a state aid agency, they don't want to help me. We are here to help you. We have people Monday through Friday, 8 to 5. You will speak to a live person. Again, please contact us with any questions. Thank you so much.
Thank you. Thank you, Andrea. Great job. Now I can attest that when you do call them, they actually pick up the phone. If they're not there, they actually call you back. I mean, I left a message and I got a call back in a very short period of time. So I would urge you, if you're having insurance difficulties, make sure you reach out to them. They've been very responsive, and I can tell you that from my own personal view. With that, we're going to move on into the Small Business Administration. Most of you know it as the SBA. Robert, can you put up the slide for Kim so I can really give her the accolades that she deserves? Thank you. Keep going. It's after that one. Nope, that's not Kim. There she is. Thank you. All right. So one back, Robert. Thank you. Reverse it, please. Thank you. Okay. I will also can attest to the Small Business Administration. On the personal side, when we experienced an earthquake in 1991, my mother owned a home in Pacoima, and we ultimately had to get a Small Business Administration loan. The interest rate was significantly lower than the interest rate at the market at the time. And I know in talking to Kim's colleague, Gabriel Perales, who was a panelist in our earlier webinars, the interest rates were below 4% back in the beginning of the year. during the aftermath of the wildfires. So Kim is local, and she's currently deployed under the, wow, Presidential Declaration of 2010. Wow, that's pretty heavy. So she's been covering the wildfires in Altadena, Palisades, Malibu. Prior to that, she served in 3 months in Texas. We feel for you. The Texas Hill Country, July 4th weekend. What is PAS, Kim?
Up at the top, Public Affairs Specialist.
Okay, thank you. So anyhow, I didn't do you a very good job, but she's much better than what I described. Kim Weatherby, Public Affairs Specialist for the Small Business Administration. Without further ado, you're on.
Okay, let me share
Okay, Rob,
my,
you can stop sharing. Thank you.
let me share my PowerPoint. Okay, let's go up top. Slideshow from beginning.
There you go.
There we go. Okay. So as Mel kindly said, my name is Kim Weatherby, and I am a public affairs specialist for the Small Business Administration Office of Disaster Recovery and Resilience. So a lot of you agents might be familiar with the SBA regional offices that helps small businesses get off the ground with mentoring and whatnot. My division comes in specifically when a disaster is declared. So yes, I have just come from Texas, and I've been at other places, and all of us public affairs specialists, we get sent all over the country. I'm honored to be back here. I am a local resident. I was born in Glendale. I grew up in La Crescenta. I don't want to date myself, as Mel said, but I also remember the 71 Selmar earthquake and experienced it, along with the Northridge one, and these devastating fires. So these are pretty horrific. Let me go to the next slide. When a presidential declaration, that took a turn. Okay, so this California devastation for the fires is a presidential declaration. So it is the biggest one. And that's when SBA comes in with FEMA, as you know, and that allows us to offer all of the survivors the most we can in this disaster. You can see there's other declarations. I'm not going to go through them all, but there is a lot of help out there with the SBA in times of disaster. It could be just a rural, it could be just a governor's, it could be because of the civil unrest that we recently had downtown. That's a smaller declaration. But right now we're dealing with this presidential declaration. And we are able to help not only businesses, as the SBA has in their name, but during times of disaster, we are able to help homeowners and renters. So this is a good breakdown, and I broke it down a couple different ways visually, because sometimes it is a lot of information. So an overview here: businesses for their physical property. If their physical property of their business has been destroyed, damaged, whatever, they can apply for up to $2 million to repair or replace that. Then businesses also are able to apply economically. As Mel mentioned, it's an economic injury disaster loan. We refer to it as EIDL for short, and that they also can apply for up to $2 million. Then separately for homeowners can apply for up to $500,000 to repair or replace their physical home, the damage to their home, if it was destroyed, just damaged. And then renters and homeowners can apply for up to $100,000 for their personal property. So anything like walls in the home, and that includes vehicles. I know we've seen a lot of the images, and cars are just burnt up all over the place. So that would include that. And then all of those are allowed to, for the physical, you can, once you get the ball rolling, you can apply for mitigation up to 20% more for your physical damage. And I've broken that out a little bit further Let me just go. Boy, this thing is sensitive. So this is a different breakout for the renters and the homeowners. So you can see renters, personal property, including automobiles. The same thing for homeowners, but in addition, homeowners can apply for that 500,000 to repair or replace their home. And then the economic injury is where we're at right now. That is what we're still helping people with. That deadline is in a 60-day grace period. So people still have till December 7th if they have a business that's been economically challenged. That date is further than the physical, because sometimes a business just hasn't done their, if they're a large business, they maybe haven't gone through their financials yet and even realize that they've been impacted. So they can, if they've been impacted economically, and this includes people that have a home business, if they were in that area, whether their actual home broke down with their business in it, or there's all those businesses up on Lake Street, that I drive and see, they're open, but there's not a lot of people going because that whole area has been devastated. So they're not getting the foot traffic that they used to get, even though they're physically open and weren't harmed. Most of those have applied for economic injury disaster loans to help keep them afloat. Operating expenses, pay their invoices, meet payroll, meet monthly lease obligations, all of those things, they still have to pay for. So we can help them with that. Mitigation, that's also where we're at right now. If any of you real estate agents have, I know a lot of you are commercial, but I know you probably do both sometimes. So anybody that's received a SBA loan currently, especially in Altadena, Palisades as well, but there's not a lot of building going on yet. They're still in the working out permits and all of that, finding an architect, finding a contractor. So now's the time that they have their loan, that we tell them, look at your mitigation. These are all great projects that can be put into your future build, and you can request for an additional 20% of the total loss in addition. So, if they were affected by the fire, but yet they want to do something that would minimize earthquake damage, that's fine. The mitigation doesn't have to be for what the current declaration is for. It's anything that would help our area. And we know, as you said, not if, it's when another earthquake is coming, it's coming. So at the time of building, they can put those earthquake retrofitting in. They can put, high wind roof damage, reinforce the roof for wind damage, fire resistant landscaping. All of these projects, they can have their contractor write up a separate cost for it and go back to the SBA and then request those additional funds. It is a great program. We're not FEMA. FEMA is a grant. We want everybody to get those, of course. This is a low interest loan. So we have very low interest rates. There is no cost to apply. You don't have to take the loan, even if you're approved and you decide, you know what, I don't need it. That's okay. There's no prepayment penalty. And until you take that first disbursement, you pay nothing for the first 12 months, and there's no interest accrued. So, and then you can even push that out further. I mean, we're coming up on January, which, in 2 months will be a year since these fires happened. And not a lot of people have taken that first disbursement. They're able to still keep pushing that out. Some of them said they probably estimate like maybe February or March of 2026, they'll take their first disbursement. When they do that, that will then start the clock of the next 12 months that they don't have to pay. So really, they've had the money sitting there for 2 years almost before they'll actually have to start paying on it. And that just, we want them to catch their breath. We know a lot's going on. They have a lot of payments. So why not give them the extra time before that clock starts ticking? So let's see. Hold on. I think we go back one. We missed this slide. I wanted to call this out. So as Mel was talking about the interest rates, even back then, we are under what the current climate is. So for homeowners and renters, it's as low as 2.5%. That's pretty low. And again, we know people come into the centers and they're like, I don't want a loan, I don't want another loan. We understand, but we also know that things cost a lot more today than perhaps your insurance company is paying out, and you might need some additional funds. So we would rather have you get this loan at this low interest rate instead of, I think a general bank is definitely going to be higher. We know a credit card, some people, but I'll just put the last 50 or 20 on my credit card. Those are 18, 20%. That's a big difference. And you can pay this loan off at any time, no prepayment penalties. So it is a great program. The the EIDL loan is 4%, and then nonprofits is 3.625. So I'm happy to be able that we can offer those. And a little bit about our resource partners, FEMA, SBDC, that we have so many, you guys on here, the California Association of Real Estate Professionals. We're all partners together, and so we're able to work together, and I love that, because when we first open up like a resource center, one of the things I loved the most, this was the Altadena one as an example. So people would come in there initially for FEMA, for the grant, and for SBA. That's what they were going for. But as Mel said, a lot of their documents were gone. They were all burned up. They were in the house. Everything was gone. So people would come in and they were a little nervous, like, what? I don't even know what I have to give you. But at those center, these partners, everybody partnered up. So when you walked into the center, there were little booths, and it was amazing. There'd be a booth for the Social Security office, so that the survivor could go up and say, I don't have any of my information, my Social Security card. They would help them. The DMV had set up there so that they could get their new driver's license, and all of that started. The post office was there. Where do you want your mail forwarded to? Because your location now cannot receive mail. I mean, it went on, and they were there for months. And I love that everybody worked together so that the survivor only had one location to go to and could hit all of those resources at once. The SBDC, I'm going to call out just here separately, because if you hear one of your clients applies for the SBA loan and they were declined, it might be something that they can overcome very easily. So with that decline, we give them a letter that gives them an SBDC referral. That's the small business development centers, and they can go there for free. They will help them. They will look at the decline letter. They will see if they can help them overcome that. It's a great resource. So I wanted you guys to be aware that that's out there for your clients. And again, we still have disaster recovery centers available. These people are amazing. I go there once or twice a week just to talk with the CSRs, because these customer service reps have a real pulse on what's going on. They're up to date with the most current information. If you have clients that need that one-on-one, like you give them as a real estate agent, that one-on-one, taking them to properties, showing them, being personal with them. They want to look you in the eye and hear what you have to say versus just being on the phone or looking at something on the computer. These people, especially the elderly, they come into these centers, and our CSRs explain to them. If they don't get it, they will explain to them in another way. If they have trouble with computers and they don't know how to actually get on the portal and create an account, they will help them do that. They will scan their documents if they need to and upload them for them. So I highly recommend going to any of our disaster recovery centers that are still open. And on this last page, it does change. We have some closing and some opening up. It is a fluid situation, but always on our sba.gov/disaster website, you can literally just type in your zip code and it will tell you the declaration. You can click on for the California wildfires, and it will give you on the west side, on the Palisades side, what's currently open. And we have a great center here in Altadena that's still open. And then also, there's an 800 number if people are savvy and they, have no problem with just getting on the phone with somebody. They can call our 1-800 number at 659-2955. And just like the Department of Insurance, I promise you people will answer, and they're very helpful and knowledgeable. And yeah, I applaud you guys for getting ahead of it and having a playbook in place, because I do think we know there's going to be something else, whether it's a fire, an earthquake, but you guys will be better prepared to help your clients. And I thank you, Mel, for inviting us, the SBA, to speak on our programs.
Oh, you're quite welcome, Kim. Thank you. It was very thorough. And I can give another personal testimony. I went to the recovery center in Altadena back around March, and again a month or so later, and it was just a plethora of agencies, volunteers, nonprofits. I mean, Catholic Charities, all these other groups was there, Habitat for Humanities, all kinds of groups, along with the various government agencies, and SBA was right in the mix of it all. And so I can just tell you guys, I'm trying to help position you so that you can become an advocate for your clients. And certainly you may have to be an advocate for yourself if you are experiencing that disaster too. So the Small Business Administration, who in the world can offer a 2.65% interest rate loan in today's environment? I mean, today, I just opened a deal a couple of days ago. The interest rate was 6.2. So come on, folks. This is really real, and it will put you in a position where you can be the advocate and the hero for your client. So thank you again, Kim, for your expertise and your sharing. And local person too. We love it that you're local too, and that you're willing to go outside the box to help others too. With that, we're going to move on into the department. Frank, are you all ready to be queued up?
Sure am.
Okay, for the LA County Assessor's Office, some of you have met Assessor Jeffrey Prang. He's very approachable, has some great innovative things he's done. Frank's been with the department for a number of years. He's a chief appraiser. So if any of you guys want to know what it takes to get your property reassessed and how to appeal, he can go through the ins and outs on that. But I'm not going to steal your thunder, Frank. Rob, if you could put up his resume or his bio, so we can talk a little bit more in stock about Frank Diaz Jr. There we go. All right, so Frank, wow, you look pretty young there, 26 years. My gosh, you must have went there straight out of high school, bro.
No, not really. I actually worked in the private sector first. So,
Okay. Well, Frank, tell us a little bit about you, and then share what you would like to share with us about the whole process with the appeals process, and also, what you need to do in a calamity or in the aftermath of one.
will do. Thank you for having us, Mel. Yes, I'm a chief appraiser. The assessor's office basically is broken up into basically 5 distinct regions. You have the downtown, which is we call just the Hall of Administration or the headquarters, and then you have the 4 districts. I am the East District Chief, basically from the San Bernardino County line to about where Eden Fire occurred, south to like La Mirada area, the border, Orange County there. So yes, I've been with the office 26 years. I've had various roles, and I look forward to presenting this information. I think you'll find it helpful, and we also have part of our presentation is directed directly for real estate professionals. So with that said, let me share my screen.
All right, Rob, if you can let Frank share screen. Thanks.
Very good. So with that, let's start. All right, some information about the Eden and Palisades fire from our perspective. Obviously, parcels a little different than buildings. There could be multiple buildings on a parcel, also, automobiles and other things that would fall under the insurance categories. Total affected parcels for Eden and Palisades was over 20,000. 53% of the affected parcels were fully destroyed. 9% partially destroyed, and another 23% smoke damaged. So here's some information. On the far right, you can see, since this is a commercial industrial crowd, about 320 properties or parcels were damaged or destroyed or impacted by the fires in the two Palisades and Eden fires. So misfortune calamity, when a property is damaged or destroyed by a disaster, the assessor's office can actually reduce the property's assessed value by the amount reflective of the damage incurred. That reduction will remain in effect for the property until the rebuilding has been initiated. The requirement is at least 10,000 in damage. So if you have smoke damage in a home or in the business, and that possibly can exceed 10,000, so it's a good idea to file a claim. The typical claim filing period for misfortune calamities is 12 months of the date of damage. For this event, the governor just this past weekend, I believe, signed an extension that to allow 24 months to file the misfortune and calamity. So what's the purpose of this misfortune calamity besides the ability for the assessor to then reduce the property's value based on the damage? It notifies us, number one, of damage, because although we had great information on the ground from CAL FIRE and estimates of damage, there was some properties were missed for one reason or another, and the filing helped us, gather that information. And it also provides the property owner contact information with our office and defers property taxes until the claim is reviewed. So the process is updating property records reflect pre-fire new construction ensures that the property owner receives maximum benefit when they rebuild. So one of the problems we had with our office is the district, obviously the East District has a certain amount of appraisers, and the Eden area basically had one appraiser that had that geographic area. So what I had to do as a manager to get all the properties prepared for our we actually had an automated process to apply the misfortune and calamities to a large swath of these properties. Is we basically had to put everybody on it, and from our district, not just the one appraiser. It was basically the whole real estate division. Even some personal property were instructed to be ready to help, even though that's not their field, but they are appraisers. New construction assessments will result in back tax bills for up to 4 years leading up to the fire to get the information right. Misfortune and calamity reassessment will reduce the tax from the date of damage to the date you begin to rebuild. So the early filings, as you can see, the number of filings ramped up with a peak in February and continuing on up until last month. We've seen quite a bit of filings. The submission status, about 48%. For Eden and Palisades is about 61%. And then we also had, since the fires did destroy the mailing address ability to receive mail, we've had quite a number of mail address changes for those damaged properties that can be done on our website. And we'll go over our website a little bit later. So interagency coordination, primary coordination has been with the treasurer and tax collector. A lot of folks had their bills in impound accounts, and typically the governor's disasters or the MNCs will defer taxes, but I don't believe they do that on impound accounts. So what they had to do was coordinate with the tax collector, who basically has an agency they work with that basically does the impound accounts for many of these banks, and they coordinated with them. Also, we coordinated with the auditor controller, who needed to know the amount of losses and estimates. The initial fire damage estimates came from CAL FIRE. Almost like 2 weeks after the fire, we already had pictometry and GIS maps showing the actual on-the-ground damage from our satellite images or aircraft. And we were able to really quickly coordinate our automation of the MNCs from the start, because we had actual visual damage. And unfortunately, when I was out at the disaster relief centers, I'd had property owners like days after the fire that had not been to the property, and we were able to show them the extent of damage on their property, which, very sad. And but we were able to at least let them know the status of the property at that time, right there on the spot. And we've had ongoing coordination with, besides the Department of Consumer and Business Affairs, we were at the Altadena Community Center, which they run up through last month. But we continue to be on site at the LA County Public Works One-Stop Permit Center on Altadena, which is just like a block down from the original Disaster Relief Center in Altadena. And we're there on Tuesdays and Thursdays. So some of the confusion with the 110%, this was out there at the beginning, and even now we still get questions about this. The 110% is a permit expediting review. It had nothing really to do with our valuation. Allowing 110% of value is not what this was intended. This was just allowing those that had pulled a permit to, it would allow them, if they were within 110% of the original structure, to expedite the review and to get permit for that. City and county permit review process were expedited to help the original homeowners, but it had really nothing to do with the assessor's office and tax law, property tax law. So rebuilding standards and assessment. So one of the standards, there's two, and I'll go over both of them, but the first one is the 120% rule. A home's pre-damage tax base can be reinstated after the home is rebuilt without an increase in their property tax value, basically their Prop 13 value. The market value of the rebuilt home does not exceed 120% of the market value of the home that existed the day before the fire. So if you rebuild and you were able to rebuild within 120% of the value, then you would be restored to your original base value, regardless of what was done or what the footprint was of the property before. The requirement, the reconstruction would be completed within 5 years. I believe this is another one of those items that got changed this weekend to 8 years. The problem with that is this. From January 1st to June, we did a study of the cost, and annually, a property in LA County goes up about 8% a year. So within 1 year, you've already lost part of that 20% that you can go over your original market value. The second problem was the economics of supply and demand have restricted the ability to rebuild. There's a lot of pressures. You've mentioned the trade embargoes or the tariffs. And so since January to June, the cost of materials and labor went up already 6%. So between the natural rise of value that occurs in LA County of 8%, and then the 6% of just the cost increases, you're already looking at a big chunk of that 20% being eaten up. So so part of the construction exceeds 120%. That allowance will be assessed at market value. So let's say you build and let's say your property was worth $1 million before. You could get up to 1.2 million rebuilt, and it won't be reassessed. But let's say you rebuild a home and the market value is 1.3. So the 100,000 additional will be assessed at market value. The other component will be assessed at your Prop 13 base value, your original assessed value. It's very unlikely the standard will benefit many affected property owners due to those things I mentioned before. Now, there's a second. This is actually the original MNC law. It's called substantial equivalent. So if you have a 3-bedroom, 2-bath that existed before, 1,200 square feet, and you rebuild a 3-bedroom, 2-bath, very close to 1,200 square feet, chances are you are in substantial equivalence. The appraiser in charge of reviewing that would say, hey, they did a good faith effort. Let's say they came at, they originally had 1,200 and they come up at 1,225, 1,230. You know, the building standards have changed since the original structures were built. So there may be some requirements that required a little bit wider hallways or let's say just area. And a good faith effort or a good chance of getting reassessed at the original value. So if you come back with a 3-bedroom, 2-bath, the garage was either attached or off to the side, and that's what you rebuild, then you will likely get your original base Prop 13 value back. So the rebuilt home is substantially equivalent to the original in its pre-damaged state. Substantial equivalent means similar in size, utility, and functionality. And the reason we mention utility is because utility, let's say you have a 1,200 square foot house, but you add in an ADU in that 1,200 square, that is not the same utility. So a good rule of thumb is if it existed before and that's what was rebuilt, then you will not get reassessed if it's similar size and utility and functionality. But if anything that was not there before that now is going to be rebuilt in there, then that is new construction and will be assessed at market value. So just want to make sure you're aware of that. And again, the construction in excess of substantial equivalent of the original property assessed at market value and added to the reinstated tax base. So again, let's say you had a 1,200 3-bedroom, 2-bath, you go to 1,300 and you add a bathroom, then that additional square footage and the additional bathroom will be what's reassessed at market value, but the rest of it will be bringing along your original Prop 13 value. Now, the assessor's website, I wanted to go over a little bit of information on that. It has a variety of information, links to various resources for you and your clients. You're on the contact us portion of the site, which I'll show you in a minute. You can actually book an appointment and schedule a consultation with a variety of our units in our office, from the ownership, if you have a question of propositions, if you have a question of the status of your rebuild and you had questions for our appraiser, you can actually schedule a consultation 48 hours in advance, and it could be either in person or online. We also have a chatbot where you can ask a question, receive answers to a variety of information or questions. I'll give you an example. We kept hearing, I guess a lot of folks that were at the DRCs or the disaster recovery centers were from the South, and they kept using Homestead. Well, Homestead in California has a totally different meaning. Here we use a homeowner's exemption. And so we have a homeowner's exemption. So Homestead is something with the register recorder. So if you type in Homestead on that chatbot, it'll actually give you a detailed explanation of that and the resources to look for Homestead, and it actually tells you what the difference is. So I know that because I wrote that part. So again, additionally on the website, you can find a variety of forms, information, and answers to frequently asked questions. And we even have a real estate professional toolkit. So let me show you that. So where I have the arrow where it says real estate toolkit, if you pressed on that, if you look over to the right, you can see contact us. That's where you can make the appointments, find information of the closest office. But if you wanted to look at the real estate toolkit, this is what would appear. A picture of my boss, Jeff Prang, the assessor. And on the far left, you can see the real estate toolkit goes from newsroom, Prop 13, Prop 19, property search tools, data sales and recent sales, the disaster, misfortune, and calamity information, change of mailing address, new construction, remodel, and common real estate fraud information, and how to calculate the fair market value of a home. That's probably very helpful for a lot of folks, and a litany of other things that could be used here in this valuable resource for professionals. And that's the conclusion of my presentation, and I guess we'll take questions after. Thank you.
Thank you, Frank. Thank you, Frank. Great information. Really appreciate it. And some of you serve on the LA County Assessors Advisory Board, so you know about this information. What I would ask you to do is just spread the word, share it with your friends, with your neighbors, with your clients. And we're going to go with a couple more slides, and then we're going to go into Q&As. Rob, are you back? All right, so this is our LA. You know, we know Santa Monica, we know the beaches. Next stop. I just want to talk about, you know, this is what it looks like now, but next, Rob. And the port of Los Angeles is one of the busiest ports in the world. And this is one of our exchanges for freeways. Imagine that we have a tsunami who came and washed up all those cranes in the port and what your life would be like then. All the Christmas and Hanukkah gifts you've been getting, you won't get because they'll be all under in the bottom of the harbor. Imagine a freeway exchange where all of those circle of things have been collapsed. That's what is likely to happen with our next major disaster. Rob, next. So this is what happened in the Malibu Palisades fires. A whole commercial development in the Palisades, a beautiful area, was just totally torched, all except for one where a private developer was able to get his own fire crew and pump his own water, and he preserved some of the buildings on the properties that he owned and that he had leased out. But for the most part, I was a fire commissioner and I read the fire incident report. The fire started on January 7th, approximately 10:30 a.m. is when the first fire call went out. The fire was not contained until January 31. So 3 weeks, the fire just continued to burn and torch homes. Thousands and thousands of homes were destroyed. Many of the businesses in the Palisades. I have personal friends who lost their homes in the Palisades. I have friends who lost their homes in the Altadena Eaton fire. So it's important for us to realize that even though our city is beautiful now, we're only minutes away from a disaster. Go ahead, Rob. Next. Oh, there she is again. All right, so this is the Silmar earthquake, and you see some of the pictures are in black and white. Some of you may recall the photo on the far right was the VA hospital, totally destroyed, a number of fatalities. The one in the middle is the Olive View Hospital was destroyed and had to be rebuilt. And then on the left side, that's part of the exchange for the 5 freeway and the 14. So these are the kind of things that happens when an earthquake hits. I'm not a forecaster of disasters. I do forecast real estate, but not disaster. But I'm just preparing you. I was a Boy Scout as a kid growing up, and our motto was be prepared. Be prepared. And that's what I'm asking you to do as a realtor to be prepared. Next. So here's some of the statistics, the data of what happened after the Silmar quake, which is what close to 50 years ago. We had a lot of fatalities, we had a lot of injuries, but the dollar of the devastation was much lower than it is now. It was billions of dollars, 500 million, but in equivalent of today's dollars, it's billions of dollars. Next. This photo on the far right is about half a mile from my home. It's called the Northridge Meadows apartment. I owned a business, real estate office on Reseda Boulevard in Nordhoff at the time. So after the shaking continued on, I was able to get out of my house. And so I asked my youngest son and I to walk me down to Nordhoff because I live near Lassen. And we walked down about a mile and a half to get to our office, and it was devastated, you know, plate glass windows broken and all that. So when we're walking back, we see all this fire apparatus in front of this yellow building. Little did we know that at the time, when we first walked by, we didn't pay much attention to it because it was still somewhat dark. But when we got back, we saw that the building had collapsed from a 3-story building to a 2-story building. And I believe there were 14 people who lost their lives in that Northridge Meadows apartment building. So that it shows you, it hits right at home. The photo in the middle is a part of the Newhall I-5 exchange, and you see what happened to the freeway. And I think we lost one police officer on a motorcycle squad who lost his life in that same corridor. And on the left, this is very much home to me because I was on the Metro board. And the Metro is responsible for all public transit, and we manage the freeways and highways. Mayor Reardon got together with Governor Pete Wilson, and we were able to, at the Metro Board, which is the agency that's responsible for repairs and replacement along with Caltrans, we were able to have contracts let out. We got labor laws or provisions suspended for a period of time. We also were very creative, as business people do. We convinced the board, the Metro Board, to pay an incentive to the contractors. If you rebuild this freeway in a shorter period of time, we will pay you more. If you build it on time, we will pay you what you bid it. And so we were able to get that freeway up and running in a very short order of time through collaborative efforts from local government, state government, regional governments, and the governor's office. So it shows you that people can come together and make things work. That location was on the left photo is La Cienega, and some of you have traveled that freeway. That's what it looked like in 1994. Next. All right, so some of the Northridge devastation, we had some tremendous damage at Cal State Northridge, my alma mater. Many of the buildings were devastated and had to be rebuilt. The hospitals were devastated. The parking lot and the Northridge Fashion Center were collapsed. We had 10 freeway issues. We had 57 fatalities, and we had thousands and thousands and thousands of buildings that were red tagged, buildings that were uninhabitable. So this is what could happen. The total dollar volume at the time was $20 to $40 billion, depending on whose dollars you're counting. Next. Altadena and the Palisades. If you have a chance to go through Altadena, it's much cleaned up now, but it was like a bomb had hit the area. I was able to go there about a month afterwards with a dear friend of mine who grew up in Altadena, and his wife and my bride and I were all riding in a vehicle together. His wife took us to the school, the elementary school where she went to school at, was totally burnt down. So it just, these are things that are hit home personally. It's not just numbers, but these are people's, these are lives, these are your clients. Next. All right, so there was a lot of devastation there. Look at the numbers, $20 to $25 billion and still counting. From the Palisades fire, almost $10 billion for the Eaton fire. So the numbers get astronomical. The great thing about the fire, if you can think of a great thing, we only had 27 fatalities with these two fires, 17 in the Eaton fire and 10 from the Palisades. But the previous disasters had 57 to 60 fatalities, and I imagine a 7.0 is going to do a lot more damage than what these things have experienced. Next. All right, so we're going to slide to the next one, Rob, and then we're going to go to Q&As right there. We're going to stop there. Q&A. So, Carrie, I think you've been monitoring the chat box to find out what questions were asked. If you could help us by asking the questions, and then we can get our expert panelists to do their best to respond.
Absolutely. Thank you, Mel. So the first question is going to be for Andrea. So the question is, what trends are you seeing in the insurance market that could impact commercial property owners, especially regarding wildfire or earthquake coverage?
Oh, that's a really good question. What trends in commercial? Let me get the contact information for that because I want to do a little more research. I don't want to give any wrong answers on that.
Sure.
Yeah.
I can get the contact
get that
information
contact
for that
information
person.
So I can send them updates.
Man, Andrea, I can tell you're really smart. You don't answer a question you don't have the answer to. You don't just make stuff up, huh?
I do not know. It gets you in trouble.
And there was a second part to that. Will costs continue to rise?
I mean, everything is going up in insurance, unfortunately. So
okay, I'll make sure to get that contact information
please.
to you and
I can
send it
that
to you.
updated information.
Okay, and then the next question is for Kim. The next couple questions are for you, Kim. First was, can I share your slides with everybody?
Absolutely.
Okay, perfect.
Please do.
Okay. And then next, if you could give an example of the terms of SBA loans available currently.
I mean, the terms are the interest rates I mentioned, and we definitely try to do the 30 years to give you, you know, the lowest payment possible. But that is where if they go to one of our sites and meet with a customer service rep, they are knowledgeable in loan processing, and for that person's individual needs, they will be able to give them a better idea of what that loan is going to look like.
Okay. And the next question is, how has the government shutdown impacted SBA loans, and what are the biggest challenges lenders face today when underwriting SBA 7A or 504 loans?
So for the shutdown, as we heard, FEMA wasn't able to join in, I believe due to the shutdown. Part of my counterparts at the SBA in the regional office, they are all on furlough. I work for the, sorry, we're having kind of a fire drill in the hotel at the same time. The SBA Office of Disaster is exempt, and we are all working. So I have, there's probably 40 of me on the west, from east of or west of the Mississippi. They are all at declarations, and we are all working. Customer service reps are at those disaster relief locations, so we don't stop. As far as I can't speak to other lenders for the SBA program, this for the disaster loan program, this is government money. So this is not like the PPP loans that they might be referring to, where the government or the SBA guaranteed them with a bank. We are the lender. So you're dealing with the government, you're paying the government back. There's no third party bank involved in these loans.
Okay, perfect. A second part of that question was, how can brokers help clients prepare stronger loan packages?
So I mean, they're going to ask, you know, you have to show that you can repay the loan back. So they're going to ask for taxes. Again, in a disaster, if they happen to be, if it's like right out of the gate, and some of those agencies that I mentioned that are at disaster relief location, if they don't have their taxes, if they burned up, that's okay, because we're the government, the IRS is the government, we speak to one another. So they just have the applicant or the survivor sign a form saying they allow the SBA to pull their taxes directly from the IRS. So that makes it easier for them. And then they just need, you know, financial information like income, monthly expenses, their social security if they're applying for physical, their EIN number if they're a business. They need an email address, and they usually need a phone so that if they go to the disaster relief centers and they're helping them set up their portal, it'll send a code to their cell phone. So they don't, it's just normal stuff. It's not a lot of stuff to get the ball rolling, and then when they get into it with the customer service rep, they might, you know, ask for additional information like a profit and loss statement or whatever for a business.
Okay, perfect. So the last question for you is, can you give an example of terms of SBA loans available now? You may have already answered that a little bit.
Yeah, I mean, I know they say 15 to 30 years. Again, once you get approved and you're not going to the center anymore or whatever, you're assigned a loan processor. It's a case manager is what they call it, and that case manager is specifically assigned to the survivor. They get their phone number, they get their email address, they can email them through the portal. I hear many survivors just pick up the phone and are constantly calling their case manager, and they answer. So the terms, you know, like I said, if you want to go, they try to do 30 years so that the payment is manageable for you. But the nice thing is, let's say you're approved for the full 500,000, and then in the end, and you take it, but in the end, you know, you only use 250 of it. You let the SBA know, I only needed the 250, take the other 250 back. They'll redo the loan for you and redo the terms for you. So it really is an individual type question for each person.
Perfect. Thank you so much, Kim. Okay, the next question is for you, Frank. So the first question for you is, how does your team handle situations where the sale of a business and real estate are combined? Does that trigger reassessment on the full property value?
Okay. Can you repeat the question real quick? Because I was having
Sure.
like, I'm not seeing myself. So I'm like, did I disappear?
It does appear that you disappeared. But yes, I can repeat that. How does your team handle situations where the sale of a business and the real estate are combined? Does that trigger reassessment on the full property value?
Yes, the sale of the business, if it's over 51% transfer in the ownership, then that is considered a change in ownership. So it would reassess both.
Okay. Okay, perfect. And your next question and last question so far is, how does the assessor how does the assessor appraise an appeals reassessment case for a commercial property, such as shopping center, office building, where the subject rents are significantly below rent and tenants are on a long-term lease?
Yeah, basically, we have to account for that. So, since the property is encumbered by those long-term leases, we have to take that into account. Now, the vacant properties or the vacant units would be assessed at market value.
Okay, perfect. And that's all the questions that I have for now. Does anybody else have any questions that they would like to type into the Q&A? Maybe give that a minute. Or Mel, if you would like, we can move on to your next, the market lens, if you would like, and we can come back to the questions, or however you would like to do it.
Okay, Rob, can you scroll back to slide number 7? All right, so we're going to go back into the playbook. The playbook is really sacrosanct to whatever it is you're looking to do. You there? Yep. So back to the questions. So I'm going to urge all of you to, and I don't want to be redundant, but I know sometimes people doze off in the middle of something because of something. They got a call on a client or an offer or whatever. So here's some really critical questions that you need to get your arms around for yourself and also for your clients. Ask yourself, after seeing all of the devastation that's occurred over the last 40, 50 years, and knowing that the experts from the Geological Survey group is saying that we're in a window where the Los Angeles area is going to have a major earthquake, a 7.0 earthquake. We may recall that I believe the Sylmar San Fernando quake was 6.6, the Northridge quake was 6.7, but the one that they're forecasting is going to be much more powerful and stronger than all of those. And I don't know how it works, but I think the numbers go exponentially when you look at the Richter scale and the number of the violence of the shaking. So are you ready? Do you have a plan? And this could be a wake-up call for you, but also could be a business strategy for you when you have a reason to reach back out to your clients and ask them, do you have a plan? And ask the clients, do you need any help? Can I go help get some information for you from FEMA, from the Small Business Administration? As Kim said earlier, if you're in an affected area and you have a business owner that has a reduction in their revenue as a result of the wildfires, December is not here yet. And so there's still an opportunity for you to help your client get in front of an SBA advisor to fill out their application for, an economic injury loan. Again, these are loans, but the interest rates are so good. I mean, I just can't imagine you getting a better rate today. And so we're going to go back through the playbook, and today we're going to, at the end of our session, we're going to have all this recorded. We're going to edit it, and we're going to send you out the slides for each presenter that was on today, because we're recording this webinar. So you'll have that as a go-to for yourself and also for your clients. And feel free to use whatever information we have. I don't think there's any, as long as you give credit for it, that you got your information from SBA, from FEMA, from whomever you got it from, feel free to use that for your business strategy. And then what about insurance? Insurance has been a challenge, not just because of the Eden and Palisades fires, but we had the Woolsey Canyon fires. We had the Paradise fire that devastated the entire town. We had the fires in Santa Rosa not too long ago. So fires are a major part of what's going on, and most of the major insurance carriers are trying to figure out how to get out of California. And so some of the things that I think that are good strategies that I talk to my clients about are fire hardening. What can you do today to prevent a fire from spreading into your home? What can you do with respect to the vents around your structure in the roof area? What can you do about the foliage and landscaping? What can you do about the roof types that you have on the home? These are all things that if you don't get your act together, many of your insurance carriers will not renew your policy. I have a client, we just opened escrow on a property in the Sylmar, Lakeview Terrace area. And a year ago, they had to re-roof their entire roof because the roof was older. They had trees that were kind of hanging off, so they had to have trees trimmed back, and they had to come up with a more fire-resistant hardening of a roof. So these are things that you will have to do if you want to have insurance. And in many cases in our business, unless it's a private loan, and I think most private lenders are going to want insurance too, you are not going to close the transaction without having insurance. I do a lot of commercial leasing. I just closed a lease for a large client of mine, and one of the conditions that the owner of that building said was, we want to see your financial statements, but we also want to see that you have an insurance binder that covers our building while you are in your lease with us. So we could not get that lease fully executed until we had proof of insurance. And so I'm just trying to give you the ability to get ahead of the game so that you are not caught unaware. And then at the last minute, just when you spent that escrow check or that lease check, and you find out that that deal's not going to close because you didn't do some of your own due diligence. So be smart, be an advocate for your client, and before you know it, your business will be growing. And I'm forecasting that we're going into a recession. And so some of you have been through it. I've been through multiple recessions. That's not the end of the world. It's just that people have less money and they're willing to spend less of it. But people still buy, they still sell, people still lease more space, people still shrink the amount of space that they're leasing. So most of my leases are downsizing from what they had before because of the remote work situation that's been going on since COVID. So I'm just trying to position you so that you can be an advocate for yourself and your client. Next, Rob. All right. Again, the playbook. I won't belabor the Giants. My Giants did beat the Eagles not too long ago, but go ahead next. And this is what we're going to give you. Give us a couple days to make sure that our technical piece is all together, that our slides are in order, and that this particular webinar has been recorded properly and cleaned up. So give us a couple days, and Southland Regional will be forwarding you the full breadth of what we've been covering today in our webinar. So yeah, I think we're getting toward the end of what we have to cover today, Carrie. I'm going to give folks another chance if they have any other questions that they might want to ask at this time with Andrea, with Kim, with Frank, with myself, please go into the chat now and let us know.
I have one more question for Kim.
Mm-hmm.
So the question is, what happens if someone doesn't pay back the SBA loan? That is, if the business went out of business and or bankruptcy.
Are you talking about a previous SBA loan and then they're applying for a disaster loan, or if they had a previous COVID loan and they're applying, or are you just saying in general if they're delinquent?
All of those.
All of those. I mean, you know, it's the government. It's, you know, they're gonna come looking for their money. So they're gonna, you know, it's not gonna be forgiven if that's the underlying question. And people, we do get that a lot where people are like, is this gonna be like the COVID loan where later is it gonna be forgiven if we can't pay and whatnot? No, you do have to pay this loan.
Thank you. I think that answers her question.
Okay.
And that's all I have so far, waiting for any other questions. Actually, there is a question for you, Mel. This person wants to know if you are going to run for mayor again.
No, I'm not running for mayor again. I made a decision. I'm going to continue to run for financial independence. That's what I'm running for. So I'm going to stay in business. I do believe I had some solution for our city, and that's why I ran for mayor. But thank you for asking the question.
Perfect. That's it so far on this end.
All right. Well, if that's it, I think we're going to call this a wrap. Let me just thank each of you again. Kim, thank you for your transparency and for your knowledge on the Small Business Administration. Keep in mind, folks, that the Small Business Administration also makes loans to residential properties too. So it's not just business properties, even though it says Small Business Administration. But the terms are just off the top. I mean, you can't beat these terms. So Kim, thank you again for especially helping us, given that your department has been reshuffling people and reassigning people. I know you pitched in for one of your colleagues. I'm
Yep.
so pleased that I got to meet you, and I
Hey,
will catch up with you later. So
okay.
yeah,
I'm counting on it. Thank you, Mel.
we'll do it. We'll do it. Andrea, thank you. We had Rabo Doza who spoke before, and you cleaned his clock. I'm sorry.
I taught Rob everything he knows. I just want to say that. I
You
brought
cleaned his
him over
clock?
from Cal Stirs, okay?
Is that right?
And then he went back to Cal Stirs. He got a promotion, but I brought Rob over. So
Okay, well, you did good. You did good, and we appreciate you stepping it up. This is the area that we probably see. I think the most unspoken of impediment for transactions today is insurance. It's not just affordability, it's availability of insurance. And the folks, if you have not paid attention on your purchase agreements, there is a fire hardening disclosure form that you have to fill out. It's pretty extensive, but this is a good reason for you to pick up the phone and go talk to some of your clients that you haven't talked to for a while. And you know, you might think about a pitch like this. Hey, Fred, how you doing? This is Arnie. You know, we haven't talked for a while, but did you know that the insurance companies may not be offering insurance unless your house or your property is fire hardened? And they'll say, what's that? So, well, you know, why don't we set up an appointment and I can walk you through your property and we can look at the areas that need to be hardened against fires, wildfires and other fires. Because who in a million years would have thought that we'd have 80 to 100 mile per hour winds pushing embers miles from where the original fire started and going for 3 weeks, devastating the Palisades and destroying almost half of the properties owned by people of color in the Altadena wildfire area. So there's a good reason for you guys to get off your you know what and make some phone calls to folks. So thank you, Andrea, for your help, for stepping it up. And would you please tell Julia Suarez that we really appreciate her letting you step in for us, and we appreciate you. All right, and then with Frank, Frank again. You know, you're a friend of the family around here. We've met you before, and we still like you. So we like you, Frank. So
I'll
thank
be
you.
sure to let my wife know I'm liked.
Oh, good, good, good. Thank you, Frank. Your information is imperative, especially if now some of you, this is a good angle for you as a business owner of a real estate business. Now you have clients that have had water damage, smoke damage, wind damage, property values have gone down, and now you want to apply for a reconsideration of your property tax assessment. And so this is a great time to talk. I know in the Altadena wildfires, there were thousands of people who lost their homes. Many of them were 65 years and older, and they were unwilling to rebuild. And so now we're starting to see some of those vacant lots come up on the market. So you know, there are opportunities and calamities too, folks. We don't wish anything bad on anyone, but part of your job as an advocate for your client is to let them know what their options are. And as I tell my clients, look, I don't make decisions for you. I don't make the payment. I don't make decisions. I don't get to keep the equity, but I will give you all the background information I can get you, and you can make the best decision for you and for your family. So thank you, Frank, for that. And Rob, thank you for stepping it up and advancing our. And Rob's going to be editing our paperwork on our paperwork with our film for us. And Carrie Kress, where are you? Thank you, Carrie. Carrie is the smiling face that you see when you walk into Southland Regional. She is one of the masterminds behind this. And on behalf of the Southland Regional Association of Realtors, we thank you for being a part of us. Thank your CEO, Valerie Beletsky, for having the vision to make this happen. Thank you, Michelle Gearhart, for stepping it up and pushing things in the place that they need to be pushed. And thank you, President Anthony Bedgood, for kicking off this event. We're at about 11:45 right now, so we're about 15 minutes early. Hopefully that'll give you guys a chance to go out and have lunch or do whatever you need to do. But unless there's something else, I am going to, Michelle, are you still there? Okay.
Yes. Yes, I am. Hi.
Hi, Michelle.
I'm
All
a
right,
real
Michelle, is there anything that you would like that as a wrap before we close off?
No, but thank you, Mel, for coming through and CABREP for participating in this. And, we look forward to getting the video out and you guys sharing this information with your offices and brokers.
Very good. And Carrie, is there anything do you have for the good of the order?
No, I think that covers it. Thank you so much, Mel.
You're
Thank you,
welcome. So on
Robert.
behalf of the California Association of Black Real Estate Professionals, we're a statewide organization that are dedicated to helping our members grow their businesses, to promoting Black homeownership and creating generational wealth, and for us working to create great leaders. We thank you all for being a part of this collaboration with the Southland Regional Association of Realtors. And with that, this is a wrap. Thank you all. Have a wonderful rest of the day.
Thank you.